Welcome back. You're watching First Trades on ET now. Nifty as of now 24,230 levels is what the Nifty is holding on to. A bit of a fall that we've seen from the day's highest point, but yes, maintaining those 24,200 levels. Let's bring on board the management of Capri Global to talk about how the numbers were for the company, what is the outlook of the company going forward. We do have Rajesh Sharma, MD at Capri Global Capital, joining in with us right now. Thank you so much, Mr. Sharma, for joining in with us this morning. I want to start by talking about your net interest income. We've seen a good growth, 27% on a year-on-year basis. NIMs have also seen an expansion sequentially. So decent numbers coming in over there. Could you give us, a sense in terms of what are you penciling for the NII growth in terms for FY25, as well as in terms of NIMs also? What is the outlook looking like for the next few quarters?
So if we talk about overall growth scenario, about the net interest income is backed by the strong growth in AUM, and we are targeting the AUM growth backed by our opening of the new branches and growth coming on from all the segment across MSME, home loan, gold loan, construction finance, and micro lab. Micro lab is a segment we recently launched, which is secure loan up to 5 lakh rupees of ticket size in a rural areas. So we clearly see that our net interest income should increase by 30 to 35% in the whole year. And our margin, because of the high yield products, now contribution is increasing because their composition is increasing. Our overall net interest margin also should improve. If you've seen the number of Q1, our spread have gone up by almost 70 basis, and which is a very good sign. And our growth in AUM on quarter have been impressive, about 11%.
You were talking about AUM growth also. That's something that's will support the growth of the company. Could you just talk to us? So does that mean that you have told us that you are aiming at 30,000 AUM in the next 2 years? So you are on track for that, or maybe that could be achieved a bit earlier?
No, so we are targeting 30,000 crore in 3 years, and I think we should be there by then. This year we are targeting a closing of in the range of about 21,000 crore, and hopefully we should do it in 2 years. But guidance we are given for 3 years. But we are on track as far as the expansion of branches is concerned, as far as adding new technology to enable us to improve our productivity and margins. So those are all going as per plan.
Mr. Sharma, what kind of tailwinds do you see for the company on the back of the affordable housing announcements made in the budget regarding PMAY? And how do you think this is going to really play out on the demand front for you?
So I think this is going to enable the cost of funds affordable for them, and the more developer will build the houses, more supply will come, and demand backed by the credit being made available from various initiatives of the government, as well as a lot of housing finance companies now focusing on this segment, which is showing the highest growth. I clearly see demand versus supply is going to match, and money being available. Next 4 to 5 years, we clearly see that affordable housing segment is going to grow faster than the formal housing segment. And this is in line with the Government of India policy, and this is giving a good growth and margin as well. So we are also focusing on this segment where we are positioned to achieve a growth of 30-35% for next 4 to 5 years.
Interesting. You, as we understand, are also sort of, building in-house technology to sell insurance products. What's the update there? How's that segment going to pan out? And what kind of expectations do you have in terms of addition to your top line? And do you, from this particular insurance segment that you're planning?
So if you have seen, the IRD has given the slogan "Insurance for All" by 2047. They are coming out with the very friendly policies in insurance, and I think cashless insurance is increasing day by day, and I think it will become compulsory cashless in maybe in 1 year's time or so, the age we see the plan. Back of this, we have almost about 6 lakh customer currently, which will grow to about 8 lakh plus customer. We intend to service all our customers through educating them about the need of the insurance, how it can be of help to them. So with our 4,000 sales agent on the ground and with our customer base, we hope that we should be able to generate this year about 40 to 50 crore rupees of distribution, and through this a decent income should flow. Next year we are targeting a top line from insurance alone about 75 to 80 crore rupees. So this along with the co-lending income and the car loan distribution, this is all three products are the fee income. We are targeting a high quality fee income in the range of 2 to 2.5% and supporting our overall ROE.
Morning. Now, the company's car loan origination subsidiary that became operational a few quarters ago and it started accruing income. How is the segment performing? How big do you see it in the near future?
So now we are present at about 788 locations with about our 1800 workforce on roll, and along with our DSA network of about 15,000 DSA. So we are clearly see that this segment, while it will show a growth of about 20%, but coming year we are also going to launch the used car finance vertical, and then some point of time everything related to car will come out with that plan in the next coming year. So this subsidiary will focusing everything related to the car. This year we see a 20% growth coming in the revenue side as well as the volumes. This year our target is to originate about 12,000 crore rupees worth of financing, and which should be able to generate a fee income of in the range of about 225 to 240 crore rupees.
You had earlier said that you expect a PAT growth higher than what you have delivered and higher than your AUM growth. So when can we see your PAT growth overtaking your AUM growth, and how will you achieve this?
So because we were in the expansion phase last couple of years, we opened a lot of branches and also invested heavily on the technology and data science capabilities to build. These all will start delivering from the second quarter onwards, and we'll see full benefits coming in the fourth quarter of this year. So we'll see that this year the cost income ratio will start coming down, and that will show that our PAT margin and PAT absolute growing over the AUM growth. So next full year we will see that is happening, but the impact will be seen from the second quarter onwards.
Mr. Sharma, great to have you on the show. Thank you so much as always for taking the time out and joining in. Quickly take a look at the markets.